Introduction to the broker-salesperson relationship. In earlier chapters, you learned how agency relationships are formed with buyers and sellers, and how listing contracts and compensation structures reflect that agency. This section turns inward and examines the internal relationship that makes modern brokerage possible. The relationship between the designated broker and the salesperson, or associate broker, working under that broker. Understanding this relationship is critical because every action a salesperson takes in a transaction is legally and professionally tied back to the employing broker. The broker-salesperson relationship defines who may supervise, who may be compensated, how risk is shared, and how responsibilities are allocated in day-to-day practice. Legal relationships and scope of authority. Real estate license law draws a clear line between a broker and a salesperson. Only a broker with an active broker's license can hire and employ a licensed salesperson. A salesperson cannot work for multiple brokers at the same time and cannot receive direct compensation from anyone other than their employing broker. Legally, the broker holds the direct agency relationship with the client, and the salesperson is an agent of the broker and a subagent of the client. That means a salesperson owes fiduciary duties, obedience, loyalty, disclosure, confidentiality, reasonable care, and accounting to the broker first, and through the broker to the client. State real estate laws typically provide two licenses: broker and salesperson, or sales agent. A broker is authorized to represent clients directly in real estate transactions. A salesperson is authorized only to represent the broker and to perform brokerage activities that the broker legitimately delegates. When a salesperson lists a property, negotiates a purchase, or conducts a showing, they are doing so on the broker's behalf, not in their own name. Wheel title. The agent, however, must act entirely on the Sagun 8 phrase, broker's behalf. Because the listing belongs to the brokerage, not the salesperson, there are specific activities that a salesperson may not lawfully perform on their own. A salesperson may not bind a client to a contract in their own name, receive compensation directly from the client, or accept listings or deposits outside of the employing broker's name. All earnest money, rents, and other funds must be handled under the broker's trust account procedures. This structure protects the public and ensures that a responsible, licensed broker supervises all brokerage activity. Salesperson's employment status. Independent contractor versus employee salespersons can be classified as either independent contractors, ICs, or employees, and this status affects tax treatment, benefits, and control, but not supervision obligations. Regardless of classification, the broker remains responsible and liable for the salesperson's actions when they act within the scope of their employment. As a general rule, independent contractors have more autonomy in how they perform their work, while employees are subject to tighter control by the broker. However, both must follow license law, brokerage policies, and ethical standards. Employment classification is largely a tax and labor law issue, while supervision is a license law and risk management issue. Independent contractor/broker relationship. Most real estate salespeople in residential brokerage are independent contractors. In this relationship, the broker can set performance expectations, such as sales goals or general production, but has limited ability to control how the salesperson performs the work on a daily basis. For example, the broker cannot dictate exact office hours, daily quotas of cold calls, or mandatory attendance at every meeting in the way an employer might with a salaried employee. Instead, the salesperson is treated as self-employed for tax purposes, responsible for paying their own income and self-employment, Social Security and Medicare taxes. The broker typically does not provide independent contractors with employee-style benefits such as health insurance, retirement plans, or paid vacation. Instead, the broker offers office space, branding, training, and transaction support in exchange for a portion of the commissions. Employee/broker relationship. Some brokerages, especially in commercial or corporate environments, may classify salespersons as employees. In an employee relationship, the broker may exert greater control over how, when, and where the salesperson performs their work. The broker can require adherence to sales procedures, set office hours, establish mandatory meeting attendance, and assign specific tasks. In this classification, the broker must withhold federal and state income taxes, pay unemployment taxes, and possibly provide benefits similar to other company employees, such as health insurance or retirement contributions. An employee salesperson might receive a salary plus bonuses or a salary plus a smaller commission split. Regardless of status, it is critical that a written agreement clearly describe whether the salesperson is an independent contractor or an employee. Explain the compensation structure and allocate responsibility for business expenses, such as marketing, MLS dues, lockboxes, or professional membership fees. Obligations and responsibilities in the broker-salesperson relationship. The relationship between broker and salesperson is mutual. Each side owes duties to the other, and failure to honor those obligations can damage careers, reputations, and even lead to legal or regulatory action. Salesperson's duties to the broker. When a salesperson affiliates with a brokerage, they are not just renting a desk. They are committing to uphold the firm's professional standards and to contribute productively to the brokerage's success. Common expectations include remaining properly licensed and in good standing with the state regulatory body, maintaining realtor membership if required by the brokerage, working diligently to sell the brokerage's listings and procure new listings, actively prospecting for new clients and leads, promoting the positive reputation and brand of the brokerage, following brokerage policies, procedures, and compliance guidelines, fulfilling fiduciary duties to clients as a subagent of the broker, maintaining required insurance, such as E&O coverage if mandated by the broker, providing reliable transportation and tools necessary to conduct business, complying with ethical standards found in the Code of Ethics and local policies, upholding all terms of the independent contractor or employment agreement. A productive salesperson aligns their personal business plan with the brokerage's standards and expectations, creating a mutually beneficial relationship. Broker's duties to the salesperson. In turn, the broker owes significant obligations to the salesperson. Because the broker holds the license authority and legal responsibility, they must provide a professional, compliant, and supportive environment, including making the brokerage's listings available to licensed agents, sharing market data, forms, and tools necessary to conduct business properly, providing training, mentoring, and oversight as promised upon hiring, offering administrative support such as contract review, compliance checks, and transaction processing, honoring the agreed-upon commission structure and expense reimbursement policy, maintaining ethical standards as a member of professional trade organizations, upholding all provisions of the employment or independent contractor agreement. A strong broker-salesperson relationship is built on trust, transparency, and mutual accountability. When both sides understand their duties, compliance improves and risk is reduced. Agent compensation and commission splits. In most real estate offices, salespersons are compensated primarily through commissions. An independent contractor typically earns a percentage of the commission the brokerage receives from a closed transaction, while an employee may receive salary plus a bonus or smaller split. The brokerage must cover many operational expenses: office space, staff salaries, technology platforms, marketing, legal and accounting services, insurance, and utilities. The brokerage's share of the commission pays for these overhead costs. The salesperson's share represents the reward for generating business and successfully closing transactions. Listing side and selling side of the commission. Every transaction has at least two sides from a compensation standpoint: the listing side and the selling side. When a listing broker enters a property into MLS, they typically offer a portion of the total commission to a cooperating broker who brings the buyer. The listing broker retains the listing side. The agent representing the buyer earns the selling side. Within each brokerage, the commission is then split again between the broker and the salesperson based on a pre-agreed commission schedule. If the same salesperson procures the listing and also represents the buyer, that salesperson may receive a share of both sides of the commission. However, they may also pay their agreed split on both sides, depending on brokerage policy. Commission schedules and negotiation. An agent's commission schedule describes how commission splits work in that brokerage across different scenarios. Factors that affect the split can include production level, expenses paid by the broker, and market norms. Newer agents or those receiving extensive brokerage paid marketing may have a lower split, for example, 50-50 or 60-40, while high-producing agents who pay many of their own expenses may negotiate higher splits, such as 80-20 or 90-10. There is no legal standard commission rate or mandated split. Under antitrust laws, brokerages may not collude to fix commission rates, and every brokerage is free to set its own structure. Clients and agents may negotiate fees that are reasonable for the services provided, and those agreements should always be in writing to comply with statute of frauds and risk management best practices. Key legal and practical issues in compensation. Real-world situations can complicate compensation. For example, when a buyer purchases a property from a developer that is not listed in the MLS, the buyer's broker must secure a written agreement, typically a buyer-broker exclusive employment agreement, to ensure that compensation is paid either by the buyer or by the developer under the terms of a written offer. In contrast, verbal agreements between two brokers, co-broke agreements, may be enforceable between brokers, but agreements for clients to pay commissions generally must be in writing. Similarly, condemnation of property by a government entity usually does not constitute a voluntary sale under a standard listing contract, so no commission is typically owed unless the contract expressly provides otherwise. These examples illustrate why clear written agreements and proper legal advice are essential. Review summary. In this section, you learn that the broker-salesperson relationship is the backbone of brokerage operations. Only brokers may employ salespersons, and salespersons are agents of the broker and subagents of the client. You saw how authority is delegated and how important it is that all listings, contracts, and funds are handled in the name of the brokerage. You explored the difference between independent contractor and employee status, understanding how this affects control, taxes, and benefits, but not the broker's ultimate supervisory responsibility. You also reviewed the mutual obligations between broker and salesperson. The salesperson commits to upholding license requirements, ethical standards, and brokerage policies while diligently generating and servicing business. The broker commits to providing listings, data, training, supervision, and agreed-upon compensation. Finally, you examined how commissions are structured, what listing side and selling side mean, why commission schedules vary, and why compensation agreements must be clearly documented. Discussion with answers. Why is a salesperson considered a subagent of the client rather than a direct agent? Answer: because the agency relationship is legally formed between the client and the broker. The salesperson acts as an agent of the broker, so their fiduciary duties flow through the broker to the client. Why do most brokerages prefer independent contractor status for salespersons? Answer: because it allows salespersons to control their own business practices while the brokerage avoids payroll taxes and extensive employee benefits obligations. The brokerage instead focuses on training, brand, and support. Why must all listings and deposits be taken in the name of the employing broker? Answer: because the broker is the licensed party legally authorized to conduct brokerage, supervise trust accounts, and be held accountable for compliance and fiduciary duties. Allowing agents to accept money or contracts in their own name would create legal and financial risk. How can commission disputes be avoided between a broker and salesperson? Answer: by having a clear written employment or independent contractor agreement that defines commission splits, expense responsibilities, and when compensation is earned and payable. Closing remarks. The broker-salesperson relationship is more than a paycheck arrangement. It is a legal and ethical partnership built on shared responsibility. A successful real estate career depends on understanding how authority flows from broker to agent, how compensation is earned and shared, and how mutual obligations are fulfilled. As you move deeper into this chapter, you will see how this relationship ties into supervision, risk management, office policy manuals, and the long-term growth of a brokerage firm.